Sales tax at point of sale splits sharply by what you sell. Coaching services land on the exempt side in most states. Courses and digital products land on the taxable side in many states. And the rules that govern when you have to collect come from the 2018 Wayfair decision, plus a patchwork of state-by-state economic nexus thresholds. This unit configures the collection layer after Module 5.2 handled the registration question. Coaching services and digital products sit on opposite sides of the sales tax question, and that split is what this unit hangs on. Coaching services mostly carry no sales tax obligation. Courses and digital products get more complicated. Wayfair changed the rules for remote sellers in 2018 by replacing physical presence tests with economic activity tests, and most states moved to enact thresholds in the years immediately after. If you sell courses across state lines past the Nexus threshold, you may have a collection obligation that did not exist for an in-state only seller a decade ago. This unit configures the point-of-sale response after Module 5.2 handled the registration question in the states where Nexus applies to you. The coaching versus product distinction sets up the operational scope of the rest of the lesson. Personal service, coaching itself, is generally exempt from sales tax in most states because most states do not tax personal services as a category. Digital products, courses, downloadable worksheets, recorded video content from a webinar series are taxable in many states, and which specific products are taxable in which specific states is genuinely complicated. Coaching services only. Read this unit once and file it. Courses, digital resources, recorded content available for purchase. This unit is operational, and the collection infrastructure needs configuring before your next product sale across a state line. Wayfair changed the rules for remote sellers in 2018, and almost every state has reacted to the decision since. South Dakota versus Wayfair Incorporated. The Supreme Court case established economic nexus as a valid basis for states to impose collection obligations on out-of-state sellers. Before Wayfair, physical presence in the state was required before the state could require you to collect their sales tax. After Wayfair, most states enacted economic nexus laws. Collection triggers based on dollar volume of sales or transaction count instead of physical presence. The typical threshold runs 100,000 in sales or 200 transactions in the state per calendar year. Cross the threshold, you register, and you collect. Current thresholds vary by state, and several states have no threshold at all. Most states landed on the 100,000 per year or 200 transactions per year pair as their economic nexus trigger, modeled on the South Dakota statute the court approved in Wayfair. Several states have moved to no threshold whatsoever. The first remote sale into the state triggers nexus, and the collection obligation starts from sale 1. Some states use different dollar figures, 250,000, 500,000. The numbers change. This is an annual refresh item on your operating calendar, and the rest of the work in this unit gets done after you know which states you have nexus in. Stripe tax is the default configuration option for coaches who sell courses through Stripe checkout. Built into the Stripe dashboard under the tax section. Calculates the correct tax rate per destination state at checkout based on the buyer's address. Collects the tax at the point of sale on top of the product price. Produces exportable reports formatted for state filing. Supports automated nexus tracking. Stripe watches your sales volume into each state and flags you when you approach a threshold. For coaches who sell courses through Stripe at any meaningful volume, This is the working default, and the configuration takes about an hour once you know your Nexus states. Platform and third-party options cover the situations where Stripe tax is not the right fit. Coaching platforms vary widely. Some use Stripe tax under the hood, some have their own tax configuration module, some do not handle sales tax at all and leave the calculation to you. Check your specific platform's tax documentation before assuming any of these. TaxJar is the third-party tax automation tool sized for small businesses with multi-state nexus. Calculates, collects, and can file on your behalf across all your states. Avalara is the enterprise tier equivalent with more features and higher cost. Both integrate with most processors. The integration cost pays for itself once you have Nexus in 5 or more states. Below the threshold is the right operating posture for most early-stage core sellers, but the sequencing trap is sharp. The thresholds are per state, and your sales mix changes faster than you track it. A single LinkedIn post that lands well in California can push a one-state register and configure problem onto your January desk by Q4. Annual monitoring is the floor. Quarterly monitoring is better once any single state crosses 50,000 in revenue. The retroactive piece is what bites. The collection obligation runs back to the crossing date the state determines, which can be 6 to 9 months before you noticed, and the back tax bill arrives with the registration paperwork. Product taxability for digital products is CPA territory and not configuration tool territory. This is Module 3.3 work that you cannot resolve from this lesson or from any software tool, because the question of whether your specific product is taxable in a specific state depends on state-level rules that change. Some states tax all digital courses, some do not tax digital products at all. Some carve out educational content as exempt, which raises a definitional question about what counts as educational. Your CPA owns the product taxability determination for each state you operate in. This lesson sets up the collection infrastructure once the CPA has told you which products are taxable where. Configure what you have today using the sales tax configuration checklist that ships with this unit. If you sell courses, open the checklist. List every state where Module 5.2 confirmed you have economic nexus, and verify that your checkout flow collects tax at the correct rate in each one. If you are pre-nexus in every state today, add a recurring annual review item to your operating calendar. Check threshold status at the end of every quarter, because the crossing date determines the back tax exposure, and quarterly checks catch the crossing in the same quarter it happened. The configuration work is small once the registration is in place. The registration work is upstream.